Well, hello everyone, and welcome to our Miller Market Minute for the end of September 2022. This is going to be a bit more than a minute because there's been a lot going on, so a lot to cover, but we think it'll be worth it, so hang tight. What a week for news in the financial world. All kinds of announcements from the government, from Bank of England, major lenders, and we're going to be digging into each one of those a little bit here in a minute. And in particular how we think the property market is going to be impacted by all these announcements. So let's start with a summary of the headlines. Most recently on Tuesday, we heard that major lenders were pausing the issue of new mortgages, obviously a big concern for those in the house buying and selling space. Obviously generated a lot of anxiety, but I think that the headline is that the majority of lenders were clearly saying they weren't going to renege on any existing mortgage offers. They were just temporarily pausing any new offers until things in the financial markets stabilize a little bit. And in particular, interest rates can be a bit more predictable so that they know the product that they're selling. And then last Thursday, interest rates were increased yet again. The Bank of England sets that to determine the cost of borrowing money in the country, and then that obviously rolls on to mortgage lenders and any other lender in the country. They've risen up to 2.25%, which is the highest level in 14 years. If you kind of look at it in a real long-term perspective, we're still in kind of historically low interest rate territory, but when you compare it to what it's been, some big increases up from 1.75% in August, and over 300% increase since February of 22. What's coming ahead? Well, the analysts predict that by the end of this year, 2022, that we're going to get to interest rates in the 4% range, and by the middle of next year, likely over 5%. Right, and then what? Friday, the Chancellor announced the mini budget. Big news on stamp duty, obviously. In the mini budget, the Chancellor included some modifications. The price threshold above which duty is to be paid is doubled from 125 to 250,000, which means basically, previously, if you bought a property and you're just you're buying not your first time property, you're just kind of moving to the next one, the first 125,000 pounds of that would have been duty free. Now the first 250,000 pounds of that is duty free, which is obviously a big change. And then for first-time buyers, that increase goes from 300,000 pounds to 425,000 pounds. So obviously a significant benefit to the first-time buyers. And then lastly, the price threshold up to which first-time buyers will pay the discounted stamp duty was increased from to 625,000 pounds from 500,000 pounds. Again, so first-time buyers benefit the most in what's changed here, but a bit of a break across the board. So what does it all mean for us in West Devon, West Country in general? Matthew Miller, with over 35 years of experience in the industry, is going to help us unravel that a little bit, and we'll have a little chat there. So Matt, let's start with first-time buyers. Seems like mixed news, but what do you think the overall impact is going to be for the first-time buyers?
Well, I think it is mixed news, but I think removing the cash element on the stamp duty helps immensely in the short term for first-time buyers finding deposits. I think in the long term we've got to look at the flip side of that. Obviously, if interest rates are going up, their monthly borrowing or monthly payments are likely to go up in tune as well. But there will be an offset financially. So hopefully we'll be able to keep first-time buyers actively in the marketplace, which is what we're all keen to do. And it will also help towards a deposit, because it means they've automatically, at £250,000, got an extra £2,500 in their deposit straight away, which will also assist. And I agree that the lenders fundamentally have held back from releasing some new products until the stability is back there. But I think once that's calmed down in a few weeks' time, there'll be a range of new products coming out anyway, and there's plenty of products still out there to choose from at the moment.
So what about those out there that have been thinking about selling in the near term? What should they be thinking about? What should they be considering?
I think the reality is that it doesn't matter what the market does, houses will sell, and they always have sold in difficult times and in good times. It's just more challenging, and I think that it'll come down to pricing, marketing strategy, and predominantly experience of the agent. I think over the last 2 years, it's been very easy to sell properties because there's been a high demand from buyers and limited stock. So effectively, sticking a property in Rightmove was enough. I think that changes now, and I think it's going to be down to experience, hard graft, and professionalism. And I think that's going to separate some of the agents out there in terms of who can do the job and who can't do the job. So it's going to be important that the right agent is chosen with the right depth and level of experience with dealing with this type of marketplace.
Yeah, and there, I think there's another kind of element there to be wary of the agents that are continuing to kind of try to dangle pound signs in front of your eyes on the valuation side. It's not going to do anybody any favors to kind of exaggerate the potential sale price of your property at this stage when we're in a market that's just starting to kind of level out and maybe start to reduce.
No, and I think that's right, and I think that probably for a lot of potential vendors looking at coming to the market over the next few months, the key is probably not to look back at what sold down the road a few months ago and at what price. That was yesterday. Today and tomorrow's market is going to be different. So, you may have to accept that there may be some sort of adjustment in pricing, but everything is relative. So, it's just keep a level head, stay calm, and make sure you're looking at the whole picture in real terms.
So, is now the right time to sell? I guess coming off of that.
Well, I think yes is the honest answer. At the moment, most people have still got a reasonable amount of equity built up in their property, so if they can get it sold now, they've got a reasonable deposit to roll over, which means that they can contain a competitive mortgage rate on the next purchase. There'll be a whole range of reasons why people are moving, whether that's for financial security, job move, family have all grown up and moved out, and two people are now rattling around in a 4-bedroom house and want to downsize and maybe clear their mortgage. So I think the fluidity in the market will be there still. It just may be that there's more stock, and therefore people are going to have to be more competitive on their asking prices, really.
Yeah, and then also kind of on a benefit there, it'll mean more choice for their onward purchase. So it's all swings and roundabouts.
Yeah, it is all swings and roundabouts. But as I say, it's been very much a seller's market. It will probably become more of a buyer's market going into, sort of end of 22, going into 2023. And I think, whereas we've had 5 or 6 buyers or more for each house over the last 2 years, it may be that each buyer has 5 or 6 properties to consider going into next year. But
and what about the buyers out there? The people who are looking for a new home in the next few months. What should they be expecting? It's what we're thinking is I guess classifying as a transitional marketplace.
I think for where we are today, it's likely that we're going to start seeing valuers for mortgage purposes starting to down value a few properties which have really sort of sold at the sort of cap. We're likely to see people looking to renegotiate slightly, and as long as that can be passed on down the chain, it's not really a financial loss, it's just an adjustment.
Yeah, and I think the other thing that's obviously the buyers will be out there thinking about is, especially the ones that are not fortunate enough to be cash buyers, the people that are out there needing a mortgage. It'll be a little bit more challenging than it was yesterday, but again, everything's relative. Things will be a bit more affordable, be a bit more choice, which will kind of counterbalance some of the other things.
Absolutely, and if the prices come down a bit, then their percentage deposit they've got increases, and that may mean that they can get a more competitive deal on the mortgage than they could have done yesterday as well. So, and that's true of anybody, whether they're first-time buyers, second or third-time buyers. Yeah. So there are added benefits to the market changing, but with the cost of living going up and everything else as well, people are just going to have less disposable income, so they're going to have to balance that with what they're spending out.
And I think for both buyers and sellers, there is a reality that we need to be prepared for, which is the potential for more change to see some breakdowns due to financial reasons, because those things are real. So that's going to happen, and probably a bit more than it happened in the last couple of years.
Yeah, and I think that's probably true of any falling market or hardening market is people's situations change a lot quicker. But again, there are other alternatives out there. There are options out there. Having an agent that will actually do old school sales progression for a start and make sure that they're talking to every link in the chain and everybody's being able to have their expectations managed is huge.
On a routine basis.
Routine basis, and I think a lot of estate agents have stopped doing that because they've cut their fees and they haven't got the time or the resources to do that effectively now. And the national average, I think, is around 40% fall through rate. You know, as you're aware, ours is well below that, but mainly because we still do a very thorough job, and you know, there's other agents out there doing the same across the country. So, you know, everybody just needs to be, you know, let's say, cautious about what you don't get, you don't pay for, and what you do get, you do pay for. So, I think the value of estate agency will come back a little bit as well.
Less of a commodity.
Well, I think the cheapest agent is not going to be the one offering the cheapest fee. It's going to be the one selling the property for the most money. And I think in order to do that, it's going to combine experience and a bit of hard graft. I think some agents have been guilty of just relying on the internet doing the job for them, rather than actually being proactive and driving the marketplace. So again, I think that's a point that a lot of people will be looking at.
It's going to be critical.
Is what do I actually get for my money?
Yeah. So I mean, I guess another topic is obviously there have been ups and downs in the property market and the economy over the years, but there will be a lot of people in the marketplace right now who haven't really experienced this kind of economic situation. Any top tips for those people at the minute that may not have been through these things before?
I think the first thing logistically is just don't panic. I suppose if you look at property, a bit like boats in a harbour, if the tide goes out, they'll all go down on the same water line, and if the tide comes back in further down the line, they'll all come back up in line. So you're buying and selling in a relative marketplace at all times. And you know, I think, as I said earlier, if the price of yours goes down but you're paying less at the other end, as long as you've got the equity cushion there, it's not money lost, because when the market turns again, you'll get that equity growth back again. So just stay calm, and it'll be absolutely fine. But listen to what your agent's telling you, I think is the responsible thing to do. And if they've got experience of this type of market, they'll be giving you sound and constructive advice. I think that's also part of the experience thing is going to be critical. And I think that you really need to make sure that you've got an agent that is prepared to go the extra mile, and not just rely, as I say, solely on internet marketing. Marketing is not what sells houses. You know, a sale is generated by somebody having an understanding and an empathy of what the buyer really wants, and then making sure that they're directed to the right properties.
Read the review websites. Make sure you kind of do your homework first.
Yeah, absolutely.
You know, I think it's wise to even kind of do a drive through your local high street. See who's there at 5:45, 6 o'clock at night on a weekday of the local agents. You'll see pretty quickly the ones that go the extra mile and the ones that shut up and go home. Yeah,
no, absolutely.
Well, thanks very much, Matt, for sharing your thoughts, and to all of you who are watching. Hope that's been a useful a bit of information for you. If you'd like to have any kind of discussion about the kind of marketplace we're going into, what might be the right course of action for you, your home, your buying experience, give us a call, 01837-54080 or 01822-617-243, and we're always happy to have a chat for obviously no obligation, and just kind of be as helpful as we can. Thank you very much.
Good night.